introducing blockchain trading, not on cryptocurrencies, not on a Bitcoin, but on U.S. common stock.
What's going on, guys? This is Aaron from Departures Capital, and we're here with Joseph Corsadina, CEO of BlackStar Enterprise Group. It's a pleasure to have you on today, Joseph. How are you doing?
I'm doing pretty good. Thank you, Aaron.
Yes, I'm excited to be talking about your company. It's truly a unique story. BlackStar Enterprise Group. Tell us more about the company, along with introducing BlackStar's digital trading platform and how you got started with this business venture.
Well, real quick, because it is a long story. We started 7 years ago, 2017, when I discovered cryptocurrencies, and I'd been following Bitcoin for a while, since 2011, but really didn't put together the technology, the blockchain technology, with the Bitcoin and what it could do for raising capital over the internet. In 2017, I started going to some of these cryptocurrency seminars just to see how the blockchain was working as far as funding private or public companies. And we had already been public, and we were looking to do a secondary in 2017. And everybody I contacted was trading cryptocurrencies. And so I needed to figure out how I could trade my public company in the cryptocurrency market and trade it on a blockchain. And that's where it all started. In 2018, I joined IBM with a group, and I figured out how to put together a blockchain. We put together the system. I hired a programmer and a coder. We did a business plan. We put together the whole system for trading digital, for funding digital, and for corporate governance, all on a blockchain. And in 2018, we presented that to the SEC and to FINRA through redoing our registration statement and our annual report. At the end of 2018, the SEC allowed us to move forward to build a demo. We took 2 years building a demo. Got back with the SEC in 2020, and then again in 2021. We filed in 21 a registration statement, which laid out our whole trading platform with the funding platform and the corporate governance. And for 2 years, the SEC vetted our system. And in July of 23, just last July, they effected our registration statement, which doesn't mean that they approved it or disapproved it, our system. But our system basically it is legal to run through the broker-dealer ecosystem without breaking any rules or regs. So in other words, the system works. It has been vetted, and it works through broker-dealer back offices. But we don't have permission to trade the system. What has to happen next year is we need to connect with a broker-dealer, either partner with one, or start a broker-dealer or acquire a broker-dealer that will quote digital securities, and then we'll present our infrastructure to FINRA, to the SEC, for it to be quoted and up in trading. And that's where we're at right now. We're at the end of the story. We're looking for a broker-dealer to connect with. We're looking to do some other funding here, so we can launch our whole program. We've gotten a couple of patents that we can talk about in a little while. That we're going to our corporate governance patent. We can put that into effect right away. We don't need permission from the SEC to start promoting that blockchain. That's kind of where we are.
Sounds like many years of hard work, and very excited for the future. So the company focuses on harnessing blockchain technology for financial solutions with a distinct emphasis on transparency and integrity. Can you elaborate on how your proprietary system, B.D.T.P, addresses the inefficiencies in corporate governance and capital raising while ensuring transparency in the financial ecosystem?
Yes. The B.D.T.P stands for it's BlackStar Digital Trading Platform. That was the original platform that we constructed for trading common shares digital on a blockchain through the broker-dealer system. and that's exactly what we filed for in a patent in 2021, and we just received that patent. And then we expanded it to not only trading on the blockchain, but being able for a public company or a private company going public to be able to fund their company through a self-underwriting on the blockchain. And the third thing that we put together, then we said, well, we've got the trading, we've got the funding, what about the regulators? And we put together a corporate governance blockchain where all the information that comes to the corporation every 30 days gets put on the blockchain, and then every 90 days it gets handed to the accountant that can do your audit. So basically, we've used the blockchain. We're introducing the blockchain into the broker dealer, the public company ecosystem, and which is also in the broker dealer ecosystem. But we're giving public companies the power to self underwrite, to trade to raise their own funds, and they can always participate with broker dealers. But our whole philosophy there is there's less than 100 broker dealers that can bring companies public, and there's thousands and thousands of companies that want to go public and want to raise funds. And so we're giving the ability to existing public companies to continue to do financing and to establish a fair trading platform for their customers, and their customers is the public. That's kind of it in a nutshell. I mean, that's the three main areas in the brokerage industry, is raising capital, is trading, and corporate governance, and your audit.
Makes sense to me. So the company recently received a patent for its blockchain equity trading platform and corporate governance platform, making significant milestones for the company. How do you envision these patents impacting the future of BlackStar and the broader financial industry?
Well, the patents, they give us a 20-year look at the market, which has taken the pressure off of us. When we got the digital trading patent, that rush to be the first to the market. It gives us time to do it the right way and get funded the right way. So patent actually gives me time to achieve my goals, and what those goals were is to bring fair trading to over-the-counter stocks. One thing that the cryptocurrencies and trading through a wallet, if you look at the reasons why people wanted to trade through a wallet, they wanted to trade their own account. They're tired of getting charged maybe too much commissions. They're tired of the spread in the stocks. They're tired of being shorted stocks. Every time they got interested in a little company, all of a sudden the market makers, they can sell, and they don't have to own stocks. And so it's really discouraged customers from trading over the counter stocks. And when the wallets were formed, and people just open a wallet and just trade on the internet right to the blockchain, I saw that as a solution to what was going on in the over the counter market. And the first thing I thought about is, how can I get those wallets back into the broker dealer ecosystem and give those people the same advantages that they felt that they were getting through the wallets. Well, the crypto market has done a complete circle. All of a sudden, all these crypto exchanges have popped up. And the crypto exchanges work a lot like the broker dealer exchanges and the broker dealers. And now the crypto wallet guys that thought they were trading right to the blockchain, they're trading into a dark and dirty market. Mm-hmm. So basically what I've done is I've taken all the advantages of trading through a wallet and trading directly to the blockchain and trading to the buyer on the other side or the seller on the other side. And I've dropped that into the broker dealer ecosystem. And that's by creating a blockchain trading platform and ours is through Amazon. First we were at IBM, and then we went to Amazon. Amazon has the best blockchain out there. They've got the best storage out there. And it with the patents, it gives us time to develop this the right way, to get funded and to put together the whole system. There's 30,000 public companies out there that could use our system, and we're not taking away from the existing broker dealer systems. We're created a platform that the public will feel comfortable in trading. When they buy stock on the platform, they're going to be buying it from the seller. When they sell it, they're going to be selling it to the buyer, and they'll be able to play the spread in between, since they'll be sending. The way it works is you'll be able to open up a brokerage account and tell the brokerage firm to send cash and stock of a certain security to your trading platform. And then you'll put your orders in, you'll buy, you'll sell. And when those orders come back, when the confirmation comes back, it goes back into your account. And so no one sees the order flow. Just like your wallet that you trade with over the internet, nobody sees what you're doing. So I've basically taken that same advantage and dropped it into the broker-dealer system.
Great. So one of the key features of BDTP is its real-time access to transactions by regulatory bodies like the SEC and FINRA, ensuring compliance and oversight. How do you navigate the balance between transparency and privacy while providing such access to regulatory authorities?
Well, with the blockchain, the blockchain is the answer to that. What the blockchain does, and our blockchain is a centralized blockchain. It's not a decentralized blockchain. In a centralized blockchain, you can name authorities that can have the key to the information, or partial key to partial information. And so where the transparency comes in is that we're giving the regulators the key, the SEC, FINRA. They don't have to take it, they don't have to look at it, but it's going to be available for them to monitor in real time trading on the blockchain. And what they can look at is they can see how the trading is going on with the market makers. We're not trying to get rid of the market makers. We've just created a platform to compete with the market makers, and it's going to increase the volume for market makers. We're going to see a lot more volume coming into these platforms, and individuals trading individual companies, which in turn is going to allow the market makers to become the real wholesalers, that the reason why they're there. They'll still have to be good on their bid and their offer, but there'll be a lot more liquidity in between. So, for example, you'll be able to put an order in the bid. If the stock is being called $1 to $2, you'll be able to tighten the spread by putting a bid in $1.25, an offer in at $1.75. Since you have cash and stock, you'll be able to play the bid and the offer. You can tighten the spread. Well, the market maker then has to go in between if he's got an order. So the SEC is going to be able to monitor all the trades. And what we know, they can't look at every trade for every company all the time, but the fact that they can go into this platform in real time is going to keep the guys away that are cheating. They're not going to want their name and their transaction on a blockchain that's going to be on it forever. They're not going to want a pump and dump recorded on a blockchain forever for the SEC to look at. And so that's where the transparency comes in with the regulators. On the other hand, nobody else can see anything, and so that's where the privacy is still there. Mm-hmm. The corporation, the public company that puts all their information on a blockchain every 30 days, compiles that information and hands it over to the auditor every 90 days. The end result of that is an audit. And it's an audit that's on a blockchain forever. And so we've got transparency there to the regulators. Whenever they want to look at that audit, they can. And it's also privacy, because it's all the information is on a blockchain. It's there forever. It can't be changed. If the corporation makes a mistake, they have to do an adjustment. Your fees for your attorneys and your fees for your audit should go down in half, if not 75%, because the information that those attorneys and those auditors are given is directly put onto a blockchain that's immutable and is there forever, and it should be trusted by the SEC. And I think it will be.
So BlackStar aims to revolutionize trading, particularly for over-the-counter stocks through its novel trading technologies. Can you discuss the strategies you're implementing to achieve this goal and the potential impact on the trading landscape?
Cryptocurrencies were the disruptor to the financial markets, and we see ourselves as a fixer or a connector. I mean, the technology, the blockchain technology, and what the cryptocurrencies have done as far as funding private companies. I mean, that technology is just second to none if you can figure out a way to drop it into the broker-dealer business. And the only problem with the cryptocurrencies is technology is great, but everything that they're doing is illegal. I mean, the SEC only wants companies that are vetted by the SEC and that have audits to be able to solicit investments, from U.S. investors. So we've got a big job to do. There's a big market in front of us, and we've come to the conclusion that if we cannot find a partner in the broker-dealer business, we'll probably start a broker-dealer license. I've owned and operated a broker-dealer before, and the broker-dealer will just be, to quote, digital assets that are securities that are traded over the internet on a blockchain. And then we're looking, to get funded, so we can move to revenues. But the big impact is going to be when private companies start using our platform, and there's 1,000, 5,000, 10,000 companies out there using our platform. The volume that's going to come into over-the-counter stocks is going to be tremendous. It's going to be something that these broker dealers and these market makers have never seen before, because what we're doing is we're opening up the trading to the public. Right now, there's maybe 16 market makers that do most of the business and most of the over-the-counter stocks. 16 market makers, thousands of companies, millions of public investors. All right. The broker-dealer business needs to let go and let the public come in and let them trade. Let them trade $50. Let them trade $100. Who cares? As long as the money's in their account and it's going through the regulated broker-dealer business, and the broker-dealer knows where the money is. They know where the stock is. They're letting you send it to a blockchain. They're letting you put your own orders in, which happens now anyway. And everything it's all in a capsule. We're not creating any kind of new securities. We're taking common stock that's in book entry on your account, and we're throwing it over a double encrypted line to a blockchain, and we're letting you trade that money, and we're letting you trade that stock, and then it just goes back into your account. So we're opening up trading to the public is what we're doing, direct trading. And we've seen these discount houses. They say, well, we don't charge you commissions. Well, so what? My order still goes to somebody who's cheating me. that there's some houses that say, well, we've got relationships with market makers. Well, I don't know a broker that didn't have a relationship with a market maker. We all did. I had a relationship with market makers for 40 years. That's how you put your orders in. Market makers are a lot like they can play all sides. They have too much power. They see too much, and there's too much abuse in market making in small over-the-counter stocks. And the SEC has been trying to regulate that for a long time. Well, we figured out how to let them regulate it and how to let the public buy in to risky companies. The more shareholders in a risky company, the less people get hurt if the company doesn't work. It's all about risk. You know, if you lose $100 and you take, it's like a lottery ticket. Well, if we can fund over-the-counter small companies with 50 and 100 and $500 investments, you know, we can, here in the U.S., you know, unemployment will, you know, employment will go through the roof, and technology will be, you know, back on the front burner, and it's not right now. Technology right now just steals your information and tries to sell you a product.
Mhm. So the corporate governance platform you've developed aims to keep corporations honest and transparent by enabling financial audits on the blockchain. How do you foresee this platform reshaping corporate accountability and governance practices in the years to come?
I got to tell you, Aaron, this is huge. This is bigger than digital trading on a blockchain. This is bigger than Bitcoin. Um, and we're talking being organized, you know, from the get-go. We're not only going to subscribe our corporate governance platform to public companies or private companies that are going to go public, which there's 30,000 of them out there that could use our platform. And the way it works, back up a little bit, every 30 days they put every piece of paper that comes through the public company, you put it on the blockchain. Every 90 days you compile all that information, you send it to your auditor, and it becomes of record forever. We can also subscribe this platform to every corporation and every new corporation in America that's starting up. They'll be able to use our corporate governance platform from the get-go. And if you can imagine, a private company, you know, starting up, and three to 5 years down the road, they've got revenues, they got a lot going on, and they go to an auditor and they say, well, we want to do an offering, and we want to go public, or we just want to stay private, but we want to raise public money from the public. And they go to an attorney, and the attorney's got to go through 3 to 5 years of documents. The auditor's got to go through 3 to 5 years of an audit. It's probably going to cost them $100,000 with the attorney, maybe $100,000+ with the auditor, to go public. But if they have all their information from the get-go, from the day they incorporated on a blockchain, all they have to do is hand in information to the attorney. The attorney is going to trust everything that's on there. There's no other information that's for the attorney to analyze, but what's on the blockchain. And the same thing with the auditor. And so it's really simple, but it's a way that you can stay organized, as a private or a public company, and forever. and we're once every corporation starts to be organized, we know what's going to happen. Business is going to pick up. Everything's going to get better. You know, you're going to be able to when you go and you apply for, you know, whether it be a government loan, or if you're doing some kind of contracts with the government, or if you're doing a private offering or a public offering, if you've got all your information on a blockchain, all your corporate governance information on a blockchain from the day you incorporated, you're golden. You're just simply golden. And it really is going to become the basis for information, you know, with the SEC. And you know, right now, when I do my audit every 90 days, the SEC doesn't read the audits. There's 30,000 audits coming in every 90 days. But if all that information's on a blockchain, they can take that, they can manipulate that information, they can use smart contracts, and they can evaluate public company risk, and everything that's going out there. They can evaluate the trading of public companies, because all the trading information that's going to be done by all of the companies we subscribe to, all that's going to be as of record on a blockchain. And so it really is, it's the future. Blockchain is the future of the securities business. And it's going to become the basis of the future for every corporation out there.
Look forward to seeing that unfold. So with BlackStar's focus on providing financial solutions for both public companies and private entities, including securing funding and enabling autonomous underwriting, how do you anticipate these platforms will empower companies to navigate the challenges of raising capital and complying with security regulations in today's market environment?
Well, over the years, and a lot of your viewers haven't seen this, but pretty much the commodity broker was kicked to the curb in the 80s, in the 90s, the stockbroker was pretty much kicked to the curb. The commission business, went away, and public companies need to develop an investment banking department. And when I talk to CEOs and CFOs about our system and about trading, about them trading on their own digital platform, and no shorting. I mean, every CEO and CFO I've talked to said we're in. We're in. If you've got a platform where they can't short my stock, well, there's still a platform out there where they can, which is the market makers, but we're developing one for the public. I tell you what, they just can't wait for it to happen. But what they need to do is they need to develop their investment banking department. There's plenty of stockbrokers that have been kicked to the curb, and that they're used to working for commissions, and a lot of those promoters and stockbrokers, they went to cryptocurrencies. Well, they can go to work for public companies in their investment banking department, and it's a way for them to solicit and do secondary offerings without being dependent upon the broker dealers out there. It's a fact that there's less than 100 broker dealers that can bring companies public and raise you $50 to $100 million. They're just not out there. And there's more than 30,000 public companies that really need to raise money. And so, by them using their blockchain funding platform, they'll be able to do it internally through self-underwritings. Public companies have all the names and numbers of all their shareholders. The way the blockchain funding works, it's first come, first serve. So basically, I took the basic rule of the SEC is an IPO or a secondary or a private offering has to be a fair distribution of securities. Well, we know that most IPOs that have gotten done, once they get hot, they're not fair distributions of securities. All your favorite people get them. All your bigger clients get them. Get the offerings. So the way our funding blockchain works is that if the company is going to do a secondary or an offering and they reach out to the public through a mailing, the first person that comes in and says, I want $5,000 worth, he's going to get $5,000 worth if he qualifies, if he's real. Once he goes through his application and know your client and everything, that first person that comes in is going to get his $5,000. Now, if that offering is oversubscribed by double, well, he'll get 2,500. If that offering is we've only done half, well, then we'll offer him 10 grand. But it's first come, first serve, and it's indication of interest blockchain is what we call it, IOI. So that way it's a fair distribution of securities, and we can prove it to the SEC by giving them the key to the blockchain. They can see exactly who we solicited, and that's what the SEC. I can't tell you how many times my firm and firms I've worked for have been audited, and they want to see your list of who you solicited, for this offering. What did you say to them? When did you call them? What did they do? Well, clients complain all the time to the SEC that they don't get offerings that they put in for. So the public companies, the private companies should be directing the offering, not the broker dealers. And these private companies can then hand the offering over to a broker dealer to close the deal if they want, or that has a market maker that's going to make a market in it. Like I say, those thousands of broker dealers that are out there are going to be handed business, because if you give the power to the private and the public companies to raise their own capital, the brokers there'll be more volume coming in than they can handle. And an example of that is riverboat gambling. And back in the 80s and 90s, nobody thought riverboat gambling would take off, and Vegas was really against it. But what happened was, it became legal in most states, and what we did was we trained a whole bunch of people to gamble, and then when they won or when they lost or when they went on vacation, they went to Vegas. and Vegas exploded. That's the same thing that's going to happen in the broker-dealer business when we start trading digital on a blockchain. The volume is going to explode because you're going to be training traders out there to trade their own accounts, to be their own market makers, and everybody wants to. And so we're going to allow them to do it with no commissions. We're going to allow them to do it 24/7. And all they have to do is open up a brokerage account and put cash and stock in there.
Well, thank you for all the information, Joseph. It was a pleasure learning about your company, and I wish you the best of luck. We'll be following the story, and I look forward to having you back on for more information in the future.
Thanks, Aaron. I appreciate your time.